But what should I do actually in order to do that? Actually, in order to save this chart, what do I have to do in order to save this chart? If you want to keep that for further analysis, for example, when you return home, yeah, if you need to look again what you did, you go here, this cloud. No, not this one. This one. You create a name for it. For example, gold today. And save it. And it is saved. So now, when you go home and open on your computer this website, you register, you log in, you sign up for this website, you will be able to find this here, gold today. What you see here, this list of things, it's just my analysis for other commodities. You may also create these many commodities, these many trading opportunities, what you trade actually. But after that you may introduce other changes, right? For example, after I saved it, I created one more line, for instance, here. What should I do in order to save it? I go here, and choose Save Chart Layout, and it is saved once again. Is it clear? So these are just technical things, but I should stress these things because, well, we do not want to lose what we did. Fed interest rate decision came on November the 2nd at 2100. That was Fed interest rate decision, and now it's 4%, a historical height for the past 20 years, I believe. It's a historical height for a key interest rate in the United States, 4%. Absolutely unimaginable just 2 years ago, at the start of the pandemic. Nobody, I think, could believe that. The Bank of England also increased its key interest rate up to 3%. Reserve Bank of Australia, the Central Bank of Australia, did this also. Now it's 2.85%. So the whole last week was the week of interest rate decisions by various central banks. It was the previous week for the European Central Bank to do the same. Actually, here, central bank rates, down here, you have a table telling you what are the key interest rates in many countries of the world, in some of the countries of the world. For example, ECB, 2%. And what about this one, this column? This is going to be the next announcement. This is an economic calendar for you to expect. What are you going to expect? If you would like to trade on that particular event, on the announcement of the key interest rate, you will have to wait until the next central bank meeting. Understand? In terms of the Federal Reserve System, you will have to wait until December the 14th. The same hour, 2100, 21 o'clock p.m. December 14th. ECB, December 15th. Bank of England, December 15th. Central Bank of Switzerland, December 15th. Reserve Bank of Australia, December 6th. BOC, Bank of Canada, December 7th. Reserve Bank of New Zealand, November 23rd. Bank of Japan, December the 20th. The Central Bank of Russia, December 16th. Reserve Bank of India, December 7th. PBOC, People's Bank of China, nobody knows. But this is a very specific country. Brazilian Central Bank, Banco Central do Brasil, December 7th. And actually, if I click on it here, I will get more interest rates, I believe. Oh no. World central banks. You see, in Afghanistan it's 15%, Albania 0.5%, Algeria 4%, Angola 20%, Argentina 60%. Belarus 7.75%. Bermuda Monetary Authority 0%. Bulgaria National Bank, National Bank of Cambodia. Actually, many central banks in the world still conduct what kind of policy? Loose monetary policy. Yeah, you go to home page. Yeah, this is the home page. You scroll down, and here I've got this table. I click on it here, and I click once again on World Central World Central Banks, and here I've got a list of worldwide central bank activities in the Americas, in Europe, Asia Pacific, Middle East, and Africa. All central banks of the world in 10 pages. Yeah, the list of goes on in 10 pages in alphabetical order, I think. Central Bank of Djibouti, Egypt, Eritrea, Estonia, Ethiopia, Fiji, Gambia, Ghana, Guinea, Guyana, Haiti, Hungary. So each central bank of the world can be found here with their key interest rate decisions. So you see how useful that is, yeah? To have that sort of instrument in your pocket. Actually, when you write something, a sort of a paper, a master paper, a term paper, this is the best way to find statistics. For example, if you would like to have statistics for what? For US unemployment data, for example, about these data. If you would like to have this data not only for this month, but for the previous months, you go here, you click on non-farm payrolls, you click on it, and here you are. Yeah? Show more, show more, show more, show more, show more. And you see this, how many jobs they created on December 6th, January 2020. Most interesting example is here. You see this? 20 million jobs. That was when the pandemic started. Yeah? That's the most amazing thing of all. $20 million people lost their jobs. The expectation was 22 million. The expectation was 22 million. But it was better than expected. You see the irony here. It was better than expected. Not 22, but 20.5 million. Better than expected still. That kind of drop, yeah, on the graph. Compared to other months, well, other months seem like nothing changed. The pandemics changed everything here. You see? The pandemics changed everything. The labor market became very, very volatile. Until March 2020, everything was quite okay. It was normal. Life was normal. But as soon as pandemics happened, you see this volatility. And the United States economy is the most important economy in the world for the financial markets. That means you got to really be looking closer. What about other events? So, let's enlist those things. What are those events? First of all, first and foremost, key interest rate decisions by central banks. Number one priority for us to watch those statistics. Number two, today, number two, I think, inflation rate in the United States. Inflation in the United States, in the European Union, the Eurozone, Japan, in advanced countries of the world. Inflation. Priority number three, unemployment data. Unemployment data. What else? GDP data. 4. GDP growth. Oil reserves. That's going to be for the price of oil, right? Oil reserves. You watch news about OPEC meetings. And I think these are the most important events, actually. You do not have to be looking for elections. Yeah, elections. Presidential elections, parliamentary elections. These events are expected, yeah? These events are expected because everyone knows when they happen. They know the date. There are other events, of course, in the world, but they are unexpected. And what are they? Wildfires, a war, special military operation. Nobody expected. Russians did not expect it. In the West, they did expect it, but they speculated about the day. Special military operation. Then, perhaps a war, a new war in Afghanistan or in Iraq, in the Middle East. The death of a president of the United States also may be a very important event, but it is unexpected. Other announcements by the presidents, by central bankers, actually. They're also very important. This economic calendar can be used this way. If you would like to know what are the most important events, what should you do? Please also keep noting about that, make a note, memorize. For example, I would like to know what's going to happen in the week or next month. From today, starting from today, November 5th, and all the way to November 30th. Apply. Then, filters, you see here, filters. I do not need all events in all countries, because, for example, Albania, Bahrain, Botswana, Cayman Islands are not really important for the global economy. But important are China, New Zealand. Why New Zealand? It's a small country, but it's important. It's because New Zealand dollar is one of the most traded currencies in the world. New Zealand dollar, yeah, let's enumerate those currencies. What are the most important currencies in the world?
US dollar,
Well,
euro,
yeah. The euro, yen, yeah, Japanese yen. New Zealand dollar, Australian dollar, Canadian dollar, Swiss franc, British pounds, the euros. Well, I think that's enough. Yeah. China's yuan is not very important. Why? It's not very important for trading because it fluctuates not really great. It's not. Singapore dollar. Not very important. For some reason, I don't know why. Although Singapore is one of the largest financial centers in the world. But people neglect this currency. Let's see. United Kingdom, Australia, Canada, Eurozone, Japan, Russia. Why do we need Russia? Because we live in Russia, yeah? Although Russia is not very important for the global financial markets, not very important country. Switzerland and the United States. Why don't I take Austria, Belgium, Germany, France? They're also important because Eurozone is quite enough. Yeah. Why should I really choose these separate countries if I've got a single entity for them all? Eurozone. They share the same currency, and that's enough for me. Then also, what also I need? Categories. Like we said, we need employment data, central bank decisions, and inflation. And importance. If I choose 1-star importance, I will have too many pieces of news. Too many. Yeah? I will just dive into into that ocean of news, and that will be a nightmare for me to understand what's going to happen. So maybe there may be some of the events may be important. 1-star importance is also an important event, but nobody knows how much volatility it's going to create. News that creates most volatility are 3-star importance news, and that's why I choose 3-star importance and apply. And here I've got events coming in November, all the way to November 30th. November 10th, CPI. What is CPI? That's inflation in the United States. Important. Because it may say something about what's going to be the next decision of the central bank, right? If inflation escalates further, if it's more than expected, then you're sure to expect that at the next key interest rate meeting of the year's Fed, they're going to increase their key interest rate once again. And that will have some sort of an impact on the financial markets globally. As soon as the year's Fed started increasing its key interest rates, what happened in the world after that? Cryptocurrencies went down. Bitcoin went down from 70,000, almost 70,000, down to 20,000 in just a matter of months. The same goes for Ethereum and other cryptocurrencies. What about the big tech? Facebook, Meta share lost 68% of its market value since the year's Fed started increasing its key interest rate. 68, it's almost 70%. Mark Zuckerberg became 70% poorer. Right? 70% poorer than he was in December the previous year. He was one of the richest men in the world. Well, he is still one of the richest men in the world, but not as rich as he could be by now. And everything due to interest rate decisions of the US Central Bank. Then all currencies traded to US dollar, British pound, euro, Japanese yen, Russian ruble even, everything started going down, right? Swiss francs, Australian dollars, New Zealand dollars, Canadian dollars, everything started going down after the US Fed started doing that, increasing their key interest rates. Why is that? Because they're first to do that. And all other central banks had to just keep up with what the Fed was doing. But the Fed was the first. It was a trigger for financial markets. It was a trigger. And now central banks across the world just cannot be quick enough to catch up with what the Fed is doing. That's why euro is at its lowest point in 2 decades. The same goes for British pound. In late September, can you imagine that? In late September, the most expensive currency in the world, the British pound, went down to the parity to US dollar. It was 1-to-1. Just because of key interest rate decisions by the Fed, and because Liz Truss wanted to introduce unfunded taxes. That's why she actually was expelled from the government, and now Rishi Sunak is the prime minister. She could not hold her position after those losses in the pound, in the exchange rate of the pound. One more important thing to watch: government bond yields. Government bond yields. As soon as Liz Truss declared her policy, mini budget policy, and all those, when she wanted to introduce all those unfunded taxes, government bond yields in Britain skyrocketed, they say, up to 5%. And as soon as her government fell, they returned back to 3% or something. The markets became calmer, so to speak. So you see, political decisions and financial operations are very, very close in touch. Very, very closely looking for each other, what they're doing there. They're very, very important. And also, what is also very important is the spread between different government bonds of various countries. For example, if Italian bond yields diverge from the German bond yields, this is going to be serious for the Italian government debt and for the euro as well, because they share the same currency. But here you've got yields, different yields for different countries in the zone of a single currency. It's just like having two different currencies in one country, right? So it's also going to cause disparities. It's causing disparity. Yeah, everything gets out of balance, so to speak, out of control. People are going to be scared about what's going to happen next with those government bonds, and may start doing what? Selling them off at fire sale prices. And the central bank will have to intervene using taxpayer money, borrowing more government debt. So it's going to be also very serious. I think next time we'll be talking more about those dynamics, because today I think this is enough information for you to consume for these 3 hours of talking and talking and talking. And I would like you to next time I would like you to read some of the most important news and just try to speak on them, okay? And also I will try to explain further dynamics, because half of the group may be aware of those dynamics and how to analyze the market. But we have another part of the group who does not know that. That means I will have to still explain that, so that you get in touch with what we're doing with the situation. Okay? So I expect you to come up, please, next time with a couple of global financial news of high importance. And also try to look for those events on the graph. For example, if something, for example, a key interest rate decision, what kind of impact it has on Tesla shares or Bitcoin Bitcoin exchange rate or something, yeah? Try to find those events. Are there any questions? No? Yeah.
What is the connection between Italian and German
Government bond yields.
yes.
Italian government bond yields are higher than Germans because people trust more the German government and not the Italian government. Italy's debt to GDP debt is higher than Germany's, right? So when GDP debt to GDP ratio of Italy grows, that means the spread between government bond yields of Italy and Germany are going to spread, are going to diverge, and that means Italy is going to lose its creditworthiness. That's why its government bond yields go up. Investors are expected to be paid for their risks. Investors are expected more money. That means they demand Italian government to pay more to those investments if you would like that we have those bonds of your government. Understand? Is it clear?
Yes, sir.
So, for example, if you want to keep those investors, but your debt to GDP ratio goes up, that means the risk of default goes up. If the government wants to keep those investors, that it means the government will have to offer a higher interest rate for their bonds to pay for those risks. Or investors may just sell those bonds at fire sale prices and buy instead German bonds, German government bonds, that is. More questions? Okay, thank you very much. Please come next time once again. I will be anxiously expecting you here to come.